Apple just hit nearly $301. Nvidia's market cap is 5.5 trillion. Google's up nearly 4% right now, and they're being called a triple threat. They have so much going for themselves. Waymo, autonomous driving, AI, cloud, research. So these are the top 3 largest companies. And because of that, and because of the exposure that I have across my portfolios, of course, I'm seeing lots of green today. So we'll be breaking down in today's video how these big names are fueling our investments through the infrastructure, ecosystem, and overall impact that they have on our current economy. I'm always telling people that you don't have to chase penny stocks. I'm sure my portfolio is full with winners, names that you've heard of, these big companies. Now, before we get into some news, let me share how much I'm currently up on these 3 companies. Google up 189%, Apple 92%, and Nvidia 75%. And check out my video from earlier today for some updates on how my ETFs and index funds are performing. So these gains are why long-term investing matters. Understand the difference between investing and trading. I'm not in a rush to take profit. I'm building and holding, allowing my portfolio to grow, taking advantage of the power of compound interest, always reinvesting those dividends. I'm focused on the future. First, let's take a look at Apple. Some investors think that Apple is done growing, that the iPhone cycle is going to slow down. But Apple keeps printing cash, and now one of the biggest drivers that is ahead for them is improvements and strides into that AI integration, Apple Intelligence, and growing their services. Apple has a powerful ecosystem, and this is something I always stress. Apple doesn't just sell products, it sells convenience, loyalty. They're playing into our habits, leading to this company continuing to grow. It's one of the first individual companies that I invested into when I started investing on my own outside of my 401k back when it was about $135. And I can remember having a $120 average and not wanting to mess it up. But still, over time, I built up a position of a little over 60 shares, never panicking over the headlines, never giving up on the potential, the future of where this company could go. Next, Nvidia with their $5.5 trillion market cap, a company that no one should underestimate. It's not just a chip company, it's AI, data centers, robotics, and cloud computing. AI is dependent on Nvidia. And because of that market cap, it is the heaviest weighting in many of our ETFs and index funds. I want to all be investors, not just consumers. And you can own the market through funds. You don't have to choose all these individual companies. But before we get further into that, let's look at Google, currently up 3.74% on the day. And their story is very important right now. Google's cloud growth has exploded. Its revenue is up over 60%, reaching $20.03 billion. They've had a 40% increase when it comes to their paid monthly Gemini users. They've been increasing their fleet of Waymo autonomous vehicles. They currently have them running in 5 cities, including Phoenix, San Francisco, Los Angeles, Austin, and Atlanta. And they're looking to expand into more markets worldwide. AI has not killed Google's search revenue. It's still climbing. This is a company that has multiple streams of income, massive global dominance. So if one segment slows down, there's another one right there to pick up the slack. These companies are not just helping individual investors, they're helping fuel our ETFs and index funds also. I pulled up a few so we can see the weighting, how much exposure you're going to get to these 3 top names. And a few low-cost funds, nothing with an expense ratio higher than 0.09%. And I included 3 of the Vanguard funds that recently had a share split, making them even more affordable If for some reason you don't have access to investing through fractional shares, which I do on every broker that I use. So always remember, you can invest small amounts. Just be consistent and stick with it for the long term. You definitely can build wealth in that way. So when these companies like Apple, Nvidia, Google push up like they're doing today, it's also going to be reflected through investing into funds like these. First, let's run through those lower cost funds. VUG, the Vanguard Growth ETF, about $88 a share, a low expense ratio at 0.03%. We have MGK, which is the Vanguard Mega Cap Growth ETF, $89 a share, expense ratio 0.05%. And VGT, the Vanguard Information Tech, about $114 a share. And this one has the highest expense ratio at 0.09%. And I also included two S&P 500 funds, VOO, the Vanguard S&P 500 ETF, and FXAIX, the Fidelity 500 Index Fund. So you're getting a higher concentration into these big growth companies through a VUG or MGK. Both of those have Nvidia at about a 13% weighting, Apple at about 12, and then Google at about 9. FXAIX will have a similar structure to VOO because they both track that S&P 500, but is even more heavily weighted into these mega cap companies. Nvidia at 18.52%, Apple at 15.85%. But when it comes to VGT, you're getting a very insignificant amount of Google because it's classified as communications, not tech, which is the focus of this fund. So the biggest companies in America are still growing. I'm getting exposure to a few select companies by holding the shares, but I also focus on investing through my ETFs, index funds, making choices through my 401k, retirement accounts that rebalance for me and give me exposure to the top companies today and will shift, rebalance for me, and always have me on track for whatever is winning in the future. Don't obsess about perfect timing. Start investing, stay invested. Getting started by investing into the S&P 500 or the total US stock market is a way that anyone can get started today. Focus on quality. I always prioritize first retirement before other goals like having a taxable brokerage account for early retirement that you can tap into whenever you want, investing for your kids or anything else. Those are great things to add on, but make sure your retirement accounts are on track so that you can take care of your older self. So let me know in the comments, which of these big three companies do you own? How are they currently performing? Share your gains down in the comments on Apple, Nvidia, and Google. Getting your exposure through your ETFs and index funds, there's nothing wrong with that. Share those gains too. I hope you enjoyed this quick update. Make sure to like, subscribe, hit that notification bell, hype this video, check out my referral links. If you're ready to open a new account, click on my MooMoo link in the description, fund your account. You'll get 8.1% APY on your uninvested cash for the first 3 months and other great benefits, research tools, and so much more. And it is one of my brokers that I'm able to buy fractional shares, build up with small amounts. Make sure to leave me some questions, comments, even if it's a yellow heart, especially if you made it this far into the video. Thanks for watching. Okay, bye.